Hey everybody, it's Mark here at TapeTally.com on a Good Friday here, April the 6th, for your Week 14 recap. As we can see here, the markets were basically down on the week. Volatility was up. Oil finished flat, and the Nasdaq finished slightly above zero, mainly due to the all-time closing new highs of Apple, the darling of the market right now. Okay, so let's jump right into it. This week I'm going to show you guys, I do a lot of things that guide my trading, but one of the things I like to do on a regular basis is kind of step back from the market, take a look at the much longer term view. And one tool that I use is I use the Justin Mamis investment and the market sentiment chart. So if you type that into Google, you'll find it. It's all over the place, but this may be a little bit blurry. This is the best picture I could find for the time being. Hopefully everybody can see that. But what it does is it goes through the different market cycles and the emotions felt by investors. So here we have returning confidence. A lot of the dip buyers are coming in here. Enthusiasm, subtle warning, overt warning. This is sort of the disbelief that we're going to lows, the panic, the discouragement when everybody throws in the towel here. This is when blood is completely in the streets here and here. And slowly the market churns and churns here, building a new base. Then we climb a wall of worry where we meet an old level of resistance, and investors experience some level of anxiety after the wall of worry, and we go into aversion where everybody throws in the towel again. And once that happens, typically what will happen is we will see a return to confidence here. Well, after the market does a huge run up. So we can apply this on different time frames, we can apply this on some stocks as well. But what I like to do is I like to do it on the SPY, because that's the 500 largest companies in the US there. So what we'll do first is we'll apply it on the SPY. So let's take a look at the different areas here. Well, let's take a look at what we're doing here. Okay. Just give me 1 second here. So I think that on a weekly time frame, we could probably say that, well, there's a couple ways to interpret this. That this would be interpreted as the wall of worry that we're climbing here. So let's bring that picture back up here. This is like the wall of worry. We reached sort of an old level of resistance here from the 2008 financial crash here, and this was the aversion phase, and now we're going to new highs. So the market should potentially continue higher here. We could also say that this is the wall of worry, and this is, it's still not over, and we have the aversion phase to still happen here. We can go back and take a look, like this was the panic phase. Let me bring that back up here. Take a look at that. See, if we take a look at this by the dip, then the overt warning when we break that neckline there, and we can see the fast drop, panic, and discouragement. Same kind of thing here. We look at this, we got the panic, 2008, and then we had the discouragement right about here, right? This is kind of the discouragement phase there. This was the panic. So where we are is, it's kind of subjective no matter what. That's what kind of makes a market, right? So we can go on a daily time frame. This may give us a slightly different story. So one thing we can look here is this could have been the overt and subtle warning here. This is the panic. This is the panic area here. Let me just draw this. This is sort of the panic area. This was the discouragement area. Now we're climbing the wall. This was like the wall of worry. Then we had the aversion phase of the market sentiment cycle. And now we're going to new highs. So once we have returning confidence in the market, which I think we sort of do, That's typically when investors, start saying, okay, the market is healthy again, everything is fine. Then we see another dip in the market. That's what happens. That's what typically actually does happen. If you go through a lot of the market cycles, this continually happens over and over again. So one thing I wanted to talk about is, let's just use this chart here, blow this up over the past 3 Mondays. I did talk about this briefly in, I think, one of my daily recaps, but I'd like to just revisit this to kind of give you an idea of what I'm looking at. So we look at the last 3 Mondays, for example, starting the week. I'm just going to put blue arrows at the days there. So we see Monday here. Market tried to make new highs, pulled back. 2 Mondays ago, market tried to make new highs, pulled back. This Monday that just passed, market tried to make new highs, pulled back. And we're stuck in this range right now, this neutral range. And it seems like, taking a look at a lot of the underlying stocks and the breakouts and stuff, that we are losing momentum in this market. Now, that's pretty obvious. I mean, we haven't really moved anywhere, since the beginning of March, and it's the beginning of April here. So we haven't moved anywhere. We're doing a sideways correction. Whether this goes to the upside or to the downside, nobody's 100% sure here. Momentum is waning. We do know that, so we do want to remain cautious at this point. I'm cautious, leaning toward bullish, but I mean, we'll have to see what happens in the coming weeks. I did think that this week would be quite decisive in which way we're going to move, but it looks like we just tried to pop through this range and right back into it. So that's basically it. I mean, it's that simple. There's not much more to it. I mean, we could go through each of these indexes, but they're basically the same except for the Nasdaq, which I mean, that is basically up significantly more than the other indexes because of Apple, and the other indexes are acting basically the same, and same with the sectors. Well, some of the sectors are a bit different, like the financials and the home builders are doing quite well, but I just wanted to give you an overview of how I look at the overall markets, because typically if you have the winds at your back, so to say, if the market is on your side, a lot of your setups and strategies that play that way. So if you have a shorting strategy, if the market is losing momentum, or it's in a downward trend, those strategies will do better. If the market is volatile sideways, there's some other strategies you may want to play with the VXX that can do quite well. So that's basically what I look at on a weekly basis, as I try and gauge which way the market is going, and if it's stuck in a range, trending, or if it's volatile or quiet or anything like that. So hopefully that helps. Have a great Easter long weekend. Thanks.